Cool, dude.
Fantastic. I am here with Ted of Interest Smart Home Loans. Ted, you have been such a huge advocate of what we do. You've been a lot of fun to work with. Thank you so much for coming on with me today to do this video.
Yeah, absolutely. I'm very excited.
It'll be good. So today, I think that one of the most relevant conversations that we could have is really avoiding certain home buyer mistakes. In my experience as a home buyer and with working with a lot of first-time home buyers, there are some traps out there. There are some ways that people kind of get in their own way and make the home buying process more difficult. Is that something that you see quite a bit?
And I think that I see a lot of mistakes being made, just out of ignorance and lack of education.
Yeah.
I think, younger generation, it really doesn't matter, either all the way from younger generation all the way to, middle to older generation. They still make some of the similar mistakes, and a lot of it's just out of, habit and lack of budgeting skills and things like that.
Yeah.
Wanting to pursue, the next purchase and, stuffitis, as some people like to call it. Buying things, going after things and not being able to pay for it with their credit, and paying for it later. So I'm kind of like that first. I'm an eye opener for a lot of people, and they like, oh, I didn't know I had that. I didn't know this. I didn't know that. So
yeah,
it's very much an education process on my part to help them along the way and give them guidance. So.
Well, it's a big deal. We always talk about how here at Premier Credit, we get a lot of referrals from mortgage professionals and real estate professionals throughout the country. And you take a normal, rational person and you put them through the home buying process, and that really pushes them to the cliff of being irrational pretty quickly. And then you put them into credit repair, and it's like you just gave them a gentle nudge, right? Just right off the cliff. And that's that. It's hard. It's hard to battle your demons, to fight against negative habits, to kind of change your mindset when it comes to money. And I think, today, the big three mistakes that I see a lot, and I think that you probably see a lot as well, are people get caught up, right? People get kind of stuck. And so why don't you walk us through kind of the three big mistakes that you see on a regular basis with clients?
You bet. Let's start with the first one. I just want to explain the differences between online credit scores and your credit report that you get from FICO. The mortgage professionals use is the FICO scoring model. And so that, like I said, it's a lack of education, not knowing which is which. And so let's start there. There's basically three credit reporting agencies. You have the TransUnion, Experian, and Equifax. So oftentimes I hear clients telling us things like, hey, I just pulled my credit score through Credit Karma or freecreditreport.com, and my score was over 800. Why are you telling my score is only 726?
Mm-hmm.
Well, this is because essentially there are two major credit credit scoring systems that are used in the U.S. consumer market. So one is the Vantage score, and typically what is often used for consumer purchases, like that's used for when you go into like a Best Buy or going into RC Willey for a purchase, and sometimes even auto dealerships. So they use the Vantage credit score system. So versus the FICO score system, that's used in the residential lending industry. That's what we use. And so, Vantage scores range from 500 to 900, and FICO scores range from 300 to 850. So in other words, if you see your credit score over 850, you did not pull a FICO score.
Yeah, and that's Vantage Score is getting better. They've come out with new models that now mimic the scoring ranges for FICO, which is good. But it's getting more and more confusing. And this is something that I talk to a lot of mortgage professionals and real estate professionals about all the time, which is how do you just explain the difference? Because you would be amazed at some of the very creative ways that I hear people explain the difference between a Credit Karma credit score and a FICO-based credit score. I mean, it's kind of, I've heard everything from like voodoo to, you know, that's a FACO score. That's my favorite, is when they say, oh, it's a FACO credit score. And you know, in 2011, FICO sued the Vantage score over the rights to be able to use the verbiage of a real credit score, and they lost. And so technically any credit score that you have right now, you know, is a real credit score. It's just depending on what specific loan type you're applying for. And so, you know, for you, I think you nailed it on the head. The education side of just trying to help people understand that there are different credit scores for different loan types, right? And whatever they're looking on at their phone, that's great, but it's not the score that matters. It's all the content, right?
Right.
If you don't have healthy content, it doesn't matter what credit score you have, whether it's a Vantage score, FICO Ultra. I mean, there's so many of them. It doesn't matter if you have unhealthy content on your credit report. Would you agree with that?
I agree. I mean, I agree. I think the biggest thing to understand is when it comes to, if you are using, you know, the Credit Karma, that's a good thing. That means you're on the right track. I think that's commendable, because they're wanting to, they know the importance of, you know, keeping good credit and trying to be educated. And so it's not a bad thing, the Vantage score and the Credit Karmas and the freecreditreport.com. It's still a good way to gauge and monitor your credit standing. So
yeah, that's refreshing, because a lot of the people that I talk to have the opposite opinion on Credit Karma, where they're don't use Credit Karma, you know, everything but my credit score is bad. So it's refreshing to hear that, because education, even if it's not a mortgage credit score, at least people are looking at the content, right? At least people are taking action, because a lot of people just bury their head in the sands. And that's a kind of good segue to this second big problem that we run into, and a mistake that I think a lot of buyers make, which is not getting pre-qualified before they go look for homes, right?
Absolutely.
And so they've got their head in the sand, and they think, man, I haven't opened a new credit card. I'm cash only. I should be the best qualified buyer you've ever seen, right? And then they get under contract. They're so excited. They put money down, and boom, they come to you, and, you know, no credit score or something along those lines. I mean, do you see that quite a bit?
I see that more than you think. I mean, there's very rarely do I see someone without an actual credit score. You know, by the time I think there's a lot of education out there, and, you know, whether it's through the internet or just through their family circles of, you know, parents trying to help them out get a house. But I find that's a big mistake, is just burying your, I like what you said about they bury their head in the sand, and they don't think they can qualify, so they don't, you know, bother. But I think that's the number one benefit of starting the process of seeing if you can buy a house, is getting pre-qualified. There's a lot of benefits of doing that. If you want, I can go into a few of those.
Yeah, absolutely.
I like this process. I mean, really, that's really the first thing before you start, before you buy a home or even save up for a down payment. Get pre-qualified first. Because mortgage qualification requirements, they typically go back a minimum of 2 consecutive years, both with your employment history, and it helps for credit, with building your credit history. So especially for those who've never owned. So you get your ducks in a row. That's probably the main thing I want to emphasize is, get with a professional, pull a credit, submit your documentation, meaning your income docs like W-2s, pay stubs, see where you stand. So that's the biggest thing, because then I have so many times when people come to me and they think they're good to go, but they're really not. And it's a big eye opener, like I said before. And you know, that's probably the biggest benefit, is you know exactly where you stand. Yeah.
Well, it's an emotional letdown too, right? I mean,
Emotions.
that's
Yeah.
what we see a ton. We've got relationships all throughout the country, and I think that that's probably the most consistent thing that I see is the same reaction of the buildup. You know, they've been renting for 5 years, they found their dream house, they put it under contract, and then boom, can't buy a house, right? They can't get qualified because they didn't know that there was something on their credit report, or they knew that they had this thing, but they thought that it would just go away. Or, you know, I mean, that is probably the most consistent thing that I see on a regular basis is that emotional cliff that people just fall off of. And, you know, it's funny. I got married almost a year ago. My wife is awesome, but it's, you know, even with me dealing with credit, and she's going to kill me for telling the story, but I deal with credit all day long. I feel like I've got a pretty good grasp on how to manage it and what it looks like. But good heavens, I was having a conversation with her about upgrading her car. And, you know, she says, you know, I'm assuming that I've got great credit. And I immediately was just like, oh, no, we're pulling your credit report. There's no assuming in this process, right? We need to know before we go in so there's no surprises. And, you know, I'm somebody who I check my credit report on a monthly basis. I'm all over it. But there are a lot of people who will go years without looking at their credit report. I just had a client come to me recently, owns a business, you know, tons of cash, really great consumer in general, but had a charge off from like 13 years ago repopulate on his credit. And he didn't find out about it until the day he was trying to get qualified for this massive project. And it literally halted everything. In fact, it even interrupted his ability to do business. And so you kind of see that stuff. And when it comes to homes, I mean, it's emotional and it's scary and it's frustrating for people. And so to mirror what you're saying, you know, get your ducks in a row. Don't go into it blind. And believe me, the more you know before you go into a home purchase by getting pre-qualified, the easier it's going to be. And my wife doesn't watch these videos anyway, but don't tell her I told that story.
You got it, buddy. You and me.
But that's a good point. Absolutely. And really there's one other thing that I wanted to touch on. We're running out of time here.
Yeah, let's do it.
You know, the last minute credit challenges. I get a lot of phone calls, a lot of emails. Hey, you know, in fact, literally just before I got on this video, I was on the phone with a loan officer out of Oklahoma City, which thank heavens they're all safe out there. They had 26 tornadoes touch down in one day. It's crazy out in that region right now.
That's nuts.
But last minute credit challenges, things that populate at the last minute, medical collections that people didn't know about. I mean, is that something that you see quite a bit come up?
I think, yeah, when I see medical collections, it's typically, you know, people for not remembering to pay their medical bills. You know, what they get the bill in the mail and they kind of just, it goes and gets tucked away under all the other bills and gets tossed in the garbage, and they just forget to pay them. And even just small ones, you know, $100, $200, $300 accounts. And it's very common to see that even for strong income households, unfortunately.
Yeah.
You know, we live in a day and age of high medical premiums and high deductibles. So major medical type insurance plans is what I like to call them. So where your insurance company, they don't end up covering even basic office visits.
Yeah.
You know, end up piling up over the years. So anyway, how to avoid those is just a couple quick tips that's really helped my clientele is try to set up an HSA plan with your company's depositing for you automatically money every month, you know, $7,500 a month, whatever it takes, or just set up a direct deposit into a savings account just to pay for those medical expenses when they come.
Yeah. I think that is probably some of the best advice that it falls on deaf ears, in my opinion. Medical debts, medical collections, all of these things, most of the time, you know, they can be resolved and sometimes they're inaccurate, but it's almost like you have to plan ahead for a variance or a mistake. these days. You know, if you go to the doctor, you kind of have to bet that there's going to be 50, maybe 100, $150 that you're going to have to come up with, you know, just in case, right, for that one visit. Or if it's something bigger, it might be more. I mean, don't you agree with that? You kind of have to be more diligent these days.
Yeah, it's not about people who are into the, myself included. At times, you're into the, let's just manage the crisis as it comes our way. But you know, really, it needs to be a proactive, preventative, you know, approach that we need to start taking. So yeah.
Yeah, that is good advice. And one other thing that I see as well, and we'll kind of finish on this one, is inquiries. Good heavens, inquiries are so confusing for people. I see this all the time. What do you tell your clients when they start the home buying process? I mean, is it like a zero tolerance on inquiries? Is that kind of how you do it?
Really, it's not necessarily a zero tolerance. I would say, you know, once you start getting the ball rolling with a loan officer, they're going to pull your credit, and it's okay to have, you know, a few mortgage-related inquiries before you go under contract and purchase a home. That's okay. I think you can probably share with us, you know, what that looks like. But I think the biggest thing to avoid is getting multiple inquiries. So don't start shopping for your furniture or your TV screen or opening up a Home Depot account yet, you know, because those will bring your score down. Plus, biggest thing I want to remember is if you do acquire debt throughout that process, once the loan's in underwriting, at the end, the underwriter, the investor, they're going to pull a soft inquiry to see if you've acquired any more debt. And that could be a big deal killer.
Yeah.
For, you know, debt to income ratios and so forth, if you're really tight and kind of maxing out your home purchase.
I think that's one thing that I see quite a bit is people think that, oh, the loan's in underwriting, so now, you know, I can go do whatever I want. And it doesn't work that way. And I've seen a handful of deals over the past 8 years lost because, you know, in fact, I remember one of my very first clients when I started with Premier Credit 8 years ago, went and bought a Mercedes, a red Mercedes 2 weeks before they were supposed to close. And like always, somehow it was my fault that they went.
Oh, yes, of course.
But no, I mean, it really, I think a lot of people struggle, both again with the, you know, touching on the emotional side. They're excited about buying their home, they want to get the furniture, they want to do all that. But also with not understanding that, hey, you know, it's not a done deal when that loan goes into underwriting, right? I mean, the deal has to close.
Yeah. I mean, finally, I know we ran out of time here, but I would just lastly say, pick the right team. Pick a team you can trust, you know, and if you need the help, get the credit restoration and the repair work going, and the advice and the guidance you need, you know, get with a good credit repair company, and pick a good real estate mortgage lending team, you know, that's worth, anyone that's worth their salt will lead you down the right way and lay out the correct steps and work with you, you know, and not just kind of kick you to the curb. So
absolutely. And I always vouch for my referral partners, and Ted's been, you know, I think we had lunch, was it last week, with the real estate agent, and there's just something to be said about trying to educate consumers as they're going through the process so that we can eliminate that emotional irrationalism. I don't even think that's a word, but really, you know, get them to a point where they can have a positive experience and limit the mistakes that a lot of home buyers make, you know, through this process. And so, Ted, you've been absolutely amazing, man. It's been awesome.
Yeah, you've been fun. It's just fun.
And you know, I hope that this has been beneficial for a lot of you. And obviously, this is directed to a lot of consumers who might be thinking about buying a home. And I think Ted would be the first one to tell you that the process might seem a little bit scary. If you can avoid certain mistakes, you can actually make it really quite easy, especially if you have the right real estate team, you know, kind of on your side.
Absolutely. Well, I appreciate the props, Alex, and right back at you, man. I'm going to send all my people to you, and I recommend you for any of my real estate partners and just anybody. You'll get them ready for us, man, and help us, get them into a house. So
That's the goal, man. Well, Ted, enjoy the rest of your day.
you too.
To everybody watching, thank you so much for your time, and we'll be back with more of these in the future.
Excellent.
Thanks again, man.
Thanks, Alex. Hey, take care, buddy.